Welcome back, everyone. Did you see what happened in the stock market yesterday? Yikes, we saw another large sell-off in stocks that plunged more than 1,000 points. Here to explain more of what's happening and how it impacts you, our local financial advisor, Bruce Allen of Bruce G. Allen Investments. Thanks for coming in. Everyone's talking about this. So, biggest daily drop since June of 2020.
Yes.
What's the culprit? What's happening?
Well, the big culprit was some bad news from Target. Target, your favorite local retailer, or Walmart. Both of them back to back in 2 days had some pretty bad news. Target shares fell 24%. That's the biggest decline they've had since Black Monday in 1987.
Wow.
You probably weren't even born then, but Walmart was also down.
Baby.
Yeah, Walmart was down 6.8% yesterday, and it was down 11% on Tuesday, and Costco is down 12.5% yesterday. I think the real issue, what we're seeing here, is that both Walmart and Target, while they reported good revenue numbers, their profits that they're earning on those revenues have declined. And part of that's because of inflation. And so the inflationary concerns are feeding into the bottom line earnings of these retailers, and that's what's worrying Wall Street.
So inflation is taking its toll on retailers, but why is the market so spooked?
The market's really battling with two things. One is there's a shift in market leadership between growth stocks and value stocks. We'll put that one aside for a second. The second thing is that many economists, almost all of them, did not predict the recession that happened in 2020, and there were some significant signs about that. So a lot of economists are now trying to be more proactive and make sure that if they see any signs of an economic slowdown, they said, oh, it's going to be a recession. And to some degree, I think this is a little bit like being Chicken Little, Corey. So I think that there are some signs that the economy may be slowing down from its white-hot growth pace of 2021, where we grew at over 5%. But the big thing is that any sign that the inflationary expectations are going to slow down the economy and cause a recession is causing Wall Street to have very big anxiety right now, and that's what you saw yesterday.
So you've been looking at the data. It's not all bad news. What are people doing with their money right now?
I think the interesting thing is that if you look at even the big retailers like Walmart and Target, their revenues met expectations. But if you look at consumer sales, retail sales in April were up 8.2% year over year, which is a big number. The sales without autos, which have had their own challenges with getting chips and so forth, were up almost 11%. So the issue really is that if you're a bull on Wall Street, you say, hey, good news. If you're a bear, you look at the third line here, your producers put up here, inflation was up 8.3%. Well, if retail sales are up 8.2 and inflation is up 8.3, retail sales are flat. So I think the issue really is that some people take a look at this and say, oh, the economy is going to recession. A lot of other people, including me, say no recession. And here's why. In 2019, there were symptoms that led to the recession. The bond market and leading economic indicators told us there was going to be a recession in 6 months, and there was. That's not happening right now. And so I think that there's a lot of worry about this that's not justified by the data.
See, you're talking people off a ledge. It's good.
It's my job.
It's going to be okay.
You guys never call me when the market's up 1,200 points.
No, I know. I'm so sorry. Only when it's bad news. But see, you do the great job, helping us figure it all out. Bruce, thank you so much.
Good to see you.